Can you hear me? Hello?
Yeah, I
Yeah.
can.
Okay, cool.
Hold on though. I need to plug my thing in. Can you hear me?
Yep.
Okay. Um,
1 second, and I'll let everyone in a few minutes. Mm. Tell me when you're ready.
I'm ready.
Okay. Mm.
Hello, everyone. Happy Friday.
Hello, hello.
Hello, happy Friday.
Going. Good to see you all.
You too.
How's everyone's week's been?
Good.
So
How
far,
about
so
yours?
good.
Okay, I think everyone's connected to audio. In the interest of time, we'll get started. Hello, everyone. Hello to anyone that's new. Hello to all returning participants of this series. We're happy to have you here. This workshop is part of our larger series, the Financial Empowerment series, and today's session is types of accounts and cash flow analysis, and it is a third session in this entire event process. So a few housekeeping rules. This meeting is being recorded. If you'd like to stay off camera, please feel free to do so. Closed captions have been turned on. We ask that you drop your questions in the chat to ensure that the presentation flows smoothly and that we stay within the time frame that's allocated. And finally, I'd like to introduce our speaker, Ananya. For those of you that are new, Ananya Jalan is going to lead today's session as she's done in all the other sessions, and I'll give her the floor to introduce herself to you.
Thanks, Rishma. And thank you everyone for joining. I see some familiar faces and some familiar names. So I'm glad, everyone's coming back. We're gonna go through accounts and cash flow analysis, and it's the third workshop. It's a branch of everything that we've covered so far, and it's just building on the financial awareness blueprint and also going to give you some good information on what to do with all of your bank accounts. So we're gonna start off with a check-in, similar to last time. Then we're gonna go into accounts and cash flow. Specifically, what are the different types of accounts? We're going to reflect on what considerations we made when opening an account and why we chose the banking institutions that we chose. We're going to look at a high-level overview of what the banking industry and the federal or the central bank, how all of those play together. We're going to deep dive into how to open an account, what to look for, and what to keep in mind when closing an account. And then we're going to meet our friendly face, Marcus, and then finally go into our financial awareness blueprints. We'll start off adding all the information on accounts that we have, and then if we have time, we'll do the piece on cash flow analysis, or we can do that the next time with the workshop on credit cards. Finally, closing off, we'll have actionable next steps and then Q&A and feedback. And again, for feedback, the most participative people will receive a book from Ramit Sethi called I Will Teach You to Be Rich, with which Reshma will be coordinating. Okay, let's get into the check-in. So again, for those of us that met during the last two workshops, hello. It's wonderful to see you all again, and I'm very, very glad that you're back. My name is Ananya Jalan. Academically, I finished my master's in management science and engineering, which was a bunch of finance, engineering, and operations. I worked at the stock exchange and the SEC, which is the police of all financial institutions in the US, and was a consultant for a financial health company. My main aim is to create a dialogue to discuss financial concepts and aspects of finance in our lives more openly and remove that taboo around it. But why is the financial health discussion important? We see that money permeates across all aspects of our lives. It plays a part in how we interact within our relationships. And while we can't always control our income level or our expenses, especially when we have family or kids or partners that are using our cards or our accounts, what we can do is control how we feel about our finances and also move in a direction to give us more control with our money. Thank you for being here. I know we all have a number of feelings around finances or math. We might feel, nervous. We might hate math completely. We might feel really anxious when dealing with money and all of the financial aspects in our lives. We might be obsessed with checking all of our accounts every day and making sure our credit cards are paid and all of our accounts are linked. So wherever you are on that spectrum, thank you for being here and thank you for showing up. I also do want to acknowledge the confines of the systems that we live in. The financial system is known to be one of the most complex phenomena ever created. And we can see that in many different things that we read online, what we read in our newspapers about the different, areas that we can invest in finance. What are the different kinds of bank accounts that we can open? You see NFTs and, cryptocurrency and Bitcoin coming up in the news. What are all of those things? There's so many options that we have today. Even retirement funds, what their 403bs, 401ks, Roth IRAs, what are all these things? Where do we put our money? The systems are very complex. We also do see that inequities exist. So nothing is a one-size-fits-all solution, but after going through this workshop series, it should help you in making more informed decisions with the knowledge to move in that right direction that is specific to you. And lastly, let's foster an environment of interaction. So whether you prefer the chat or raising your hand and taking yourself off mute, please ask questions. And, it could be a question that someone else has and you could help someone else learn something new. And so no question is stupid. We will also have time for Q&A at the end of the session. And like I mentioned before, the 3 people that, stay through the duration of the session and are interactive will receive a very wonderful finance book. And just as a disclaimer, I am not an attorney, accountant, psychologist, or financial advisor, nor am I holding myself out to be. The information contained in this workshop is not a substitute for financial advice from a professional who is aware of the facts and circumstances of your individual situation. And with that, let's get started on accounts. Okay, so what is an account in the financial sense? It's a place which is often electronic and virtual. So, it's not a physical box in the bank where every time you have an interest of, say 5%, someone in the bank is going and adding, $5 to your $100 account. That's not how it's done. So it's not stored in a physical box. It is often electronic and virtual with a unique identifier. So a unique identifier is your account number at your specific bank, which means that your account number will not be repeated to store. And it's used to store and move funds. You can store funds electronically, and you can also move funds from one account to another. And those functionalities are enabled within your account. Another way to think of an account is similar to a garden, where you can plant your seeds or your money, which is often put there by your employer, or if you freelance, by the people you freelance for. And different types of plants grow at different speeds, and they grow differently. So similar to, let's say, a bamboo plant, which doesn't, it doesn't grow as fast, where you don't have to tend to it as much. That's similar to a checking account where you can store all of your money, versus possibly a vegetable plant where you do require more care, which is similar to a high yield savings account where you are gaining more interest. Let's go into a little bit of detail on what types of accounts we have. But right before we jump into types of accounts, let's understand interest rates a bit more. What is an interest rate? Oftentimes you'll see this term dropped in called an APY. You'll see it when you're opening credit cards. You'll see it when you're opening a bank account. What does APY stand for? APY stands for annual percentage yield, which is the amount of money that the account will give you, that the institution will give you for storing money in that account. So when you open an account, it's very important to understand the APY, or the return that you will be getting, or the money you will make from storing your money in that account. But why is this interest rate important? Let's take an example. As we know, when you go to the grocery store, the cost of milk is going up, the cost of gas is going up, going to the dry cleaners, you see the rates going up. Everything increases over time. And this is very, very loosely similar to inflation. So in some years more than others, we see, that this inflation amount, or the cost of our goods, go up a lot more than other years. On average, our costs to live they go up by almost 3% every year. So today, if you have $100, and let's say that $100 can buy you 100 bananas. Now, if we use that 3% inflation amount over the next 3 years, with that same $100 bill, in 2027, we will only be able to buy 91 bananas, which isn't too great, right? But how do we save ourselves from losing all of those bananas that we want, right? That's where accounts come in. So let's say we put our money in a high yield savings account, which is giving us that APY, or that interest rate, of about 5.5, or a little more than that, over 12 months. So what happens to our $100 in 3 years? With that 5.5% increase in our bank account, and also the 3% increase of cost of goods and services, the 5.5 outweighs the 3, and we'll be able to buy 106 bananas with our $100. So it helps, as long as we're getting more interest compared to the increase of the cost of our goods and services, we're in a pretty good place. Which is why storing your cash under your mattress or in a box may not always be the best way to go. Hey, Lewis, yeah, you have a question.
So if I were to put my money in a high yield savings account, as opposed to a checkings account, or savings,
Yeah.
with the latter, my money I wouldn't like have interest on it, whereas with the high yield savings, I would, just to clarify, right?
Exactly. You're right on the money.
Okay.
Yeah.
I also got, okay, so like what would be the sense of like just a regular checkings account then? I mean, like, wouldn't it make sense to just exclusively put it in a high yield savings account anyway?
So the benefit of a checking account, or also known as a current account, at credit unions, they're known as shared draft accounts, is mostly used for your day-to-day expenses. So you want cash to flow in and out very quickly with, there is low to no interest rate on, like, to your point, the average interest rate on a checking account is 0.07%, which is very, very low compared to what you could get in other accounts. So if you have $10,000 in a checking account, in 1 year you will be earning $7 of interest, whereas that same $10,000 in a high yield savings account at that 5.5% interest rate would give us almost $550. But the benefit, Lewis, to your point, is that in a checking account, you can withdraw funds using your checks, your debit cards, your online transfers more quickly
Mhm.
as compared to a savings account.
Okay. About high yield savings account, like would that be like where you'd use an emergency fund? Or could that be used as an emergency fund?
Yeah, a lot of people will choose to keep their money in a high yield savings account because usually for most banks in the US, the amount of time required to withdraw from a high yield savings account will be about 3 days. And so
Mhm.
people will generally tend to store some of their emergency funds in their high yield savings account. But that's exactly right.
Okay, it just seems logical because
Yep.
you got an emergency
Yep.
fund, but you're earning interest, so you're earning more money interest.
Exactly.
Just seems logical.
Yep. You have it correct.
I majored in the wrong thing.
But now what is the difference between a savings account and a high yield savings account, which is why that APY or that interest rate really, really matters. Most savings accounts today are giving an average savings rate of 0.46%, whereas a high yield savings account is giving you almost 5% or more. So if you put $10,000 in a pure savings account, then you'll get $46 at the end of the year. But again, if you put it in a high yield savings account, you'll get almost $500 at the end of the year. So when you're choosing your accounts, make sure to check for that interest rate or that APY as it's called. Again, savings accounts are mostly used for saving money for a later date, such as an emergency fund, like Lewis said, or even saving for shorter term goals. Maybe you're saving to buy a car. So you'd put your down payment in hopefully a high yield savings account because most pure savings accounts are lower in interest rate. But say a car, maybe you're saving for a vacation. Those are great savings goals to save in high yield savings accounts. Now,
There's a question for you in the chat.
Are the accounts listed on the screen examples of high yield savings accounts? No, not all of them. The only high yield savings account is the HYSA, which is a high yield savings account. Will you go over how to know which ones are safe and high yielding? Very briefly, we will talk about we'll go into detail about what to look at when choosing an institution that you bank with and how to figure out whether it is safe or not. So yes, we'll go deeper into that in upcoming slides. Okay, now what is a certificate of deposit? A certificate of deposit is also a type of savings account. But now what happens in a certificate of deposit is where you keep your money locked away for a certain time period. So now to Lewis's point where you're saving for an emergency fund, so you would put it in a high yield savings account. Usually you wouldn't put an emergency fund in a CD, because what a CD does is it locks away your money. So it will give you a high interest rate of 5%. You might see a CD for 7%. But then you're locked for 12 months, or sometimes they go even longer. Sometimes you have CDs of like 24 months or 27 months. It means that your money is locked for that time period. So if you put $10,000 into a CD or a certificate of deposit, let's say your interest rate is 6% for 12 months, and they say that your money is locked for 24 months. How much are you making at the end of that time period? 6% of $10,000 is $600. So every year, every 12 months, you are making $600. So over that 24 months that your CD is locked away for, you're making $1,200 on that $10,000 that you put in. You'll actually make a little more than $1,200 because after the first year, you're going to make 6% on top of $10,600. What happens if you need your money from a CD before the duration? You will have to pay a penalty. So if you think you're going to need that money, it's probably better to put that money in a high yield savings account. Okay, the other types of accounts are retirement accounts, which we will go into detail in workshops 5 and 6. There are health accounts, health savings accounts, where you can store money for medical purposes, and sometimes it can be used for, tuition in case of emergencies. But that is money that you put away before you are taxed on it. There are also college accounts that you can start for your children or, family members. There are money market accounts, investment or brokerage accounts. Again, we'll go into these in future workshops. Cryptocurrency accounts that we've all heard a lot of buzz about. If we read the news, then non-fungible tokens, and then our money wallets. Some of us might be using these, where it's an account that temporarily stores money. So it stores a certain amount of money that we put into that account. It's like a virtual wallet. It's having a wallet in your phone. So examples of these are Cash App, Venmo, Zelle, and PayPal.
Questions for you in the chat?
Okay, CDs are for super long-term savings versus high yield are for short-term savings. Not necessarily. So you can have shorter term CDs. You can have CDs that are 6 months or 9 months long. And high yield savings, you can store them long term. You can store them short term, or you can store them long term. So it's really up to you, but in both cases you have, so the advantage of CDs over a high yield savings account is sometimes you'll get a better interest rate. You'll make a little more money. Can you still add money to locked accounts? No, you cannot, but you can open another CD in that same, like percentage category or bucket. But it opens up as another CD, and your date of, let's say that CD expires after 9 months, your date starts on the day that you add money into that CD. Yep, I think we got 2 questions on that. Okay.
Octavia has a question, I think.
Hi, Octavia.
Hi, yes. So referring back to like the investment accounts, is
Mhm.
that basically the accounts where you put money into it and then I guess the financial experts invest that money to multiply your funds and you keep it in there for, a couple of years, I guess? Is that what that's considered?
Exactly.
Uh,
There are investment accounts. So like you mentioned that investment experts would kind of control and decide where that money goes. There are actually ways for us as individuals to decide where that money goes. So we can choose, okay, let's put it into, let's say we really like Apple, right? We are firm believers of Apple, or let's say Microsoft, and we really believe in the vision of that company. And we think that, okay, Apple is doing really well. And we want to, in our way, we believe that it's going to grow and own some shares of Apple. We can go out and purchase those. So investment accounts or brokerage accounts are areas that we can invest money, put our money in to grow, or we can have an investment advisor do it for us. So there are both options, but what you said.
okay. Okay, thank you.
Yeah. We're going to go to our handy poll everywhere. Let me see if I can copy the link. I've dropped it in the chat as well. Okay, I'm gonna give everyone a couple minutes to just pull that up. You can use the QR code on your phone. Let me enlarge the QR code if I can't fit. How did you choose your banking institution? Bank I had since I was a teenager. Yep. For me, I just went to the closest bank location. Most people I knew were also opening accounts there, and my mom had opened an account there many years ago, and so I assumed it was good. Yep, geography, convenience, from research, as your daughter was there. Okay. My family uses the same bank, so I might as well jump on the boat. Employer, you got the college Chase account. I don't even know. It's Chase and the TD one I knew. The other I took out a loan and opened an account. Yep. Same bank as my mom. Yep. I did the exact same thing. Convenience. I made a student account as a teen and the location was convenient. Yeah, I see similar themes where we opened accounts where our parents had accounts or family members had accounts or accounts that we had as children or teenagers, or it's convenient. And geographically, you know, it makes sense. Chase kept charging me too much as a teenager, so I switched. Okay, student account. Yep, I had the Chase student account. I see a lot of those coming up. I had the Chase student account as a student as well. Okay. So yes, these are all absolutely valid reasons. We've all done these. But how do we also improve on or instead of that, looking at how we choose our institutions can be a big part of how our money is stored, what kind of fees we pay, what kind of interest we get. If you've been on Chase, you know that the savings account yields are very, very low. And so we'll also go into looking at which institutions give us better interest rates. And we'll dive into how to choose institutions. Just before we start, how many accounts do most of us have? Maybe you could put it in the chat just by kind of a show of numbers. 2? 1 or 2?
Ananya, what's the difference between an account versus a banking institution?
So a banking institution is the entity or the group that stores and manages your accounts virtually. So they manage.
Right. So what you're saying is that somebody can be at one banking institution and have 5 different accounts.
Yes.
And is that the question that you're asking right now? How many accounts do people hold?
That's a good call out.
Yes.
Yeah. How many accounts do people hold?
And there's somebody asking about credit cards and if it's a bank account as well.
Do credit cards at the bank count as accounts? No, they do not. Five. Okay, I have accounts with different banks. One savings, one checking, and one business checking. Okay, so we all have most of us have multiple accounts. Okay, our next question. How did you choose your banking institution? Oops, sorry, I think I jumped. Okay, let's get a high level overview of who owns and offers accounts. So before we get into the meat of accounts, what to consider when we open them, how to open them, and then, you know, debunk some myths about accounts, and also learn how to close an account in case we have too many. I'm glad to see that we don't have someone that has, you know, 15 or 20 accounts. I feel like that would be a little bit excessive. Everyone seems like they're in a good place with the number of accounts they have, so maybe the closing an account piece might not matter so much. But let's understand the landscape of how institutions generally interact. So accounts are offered by financial institutions. Like Reshma said, you can have multiple accounts at one financial institution. Just as examples, so the central bank or the Fed is the entity that manages the economic welfare of the country, and the monetary welfare of the country. Under the central bank, which will loan out money to various banks that we have, so our Bank of America or our, JP Morgan Chase or Capital One, the central bank gives money to all of these banks. So if you take a loan, you are taking money from a bank that has gotten money from the central bank. There are three general categories of banks. The first one is consumer institutions, which includes our retail banks that we most commonly see, our credit unions, and then also savings and loan associations. There are hybrid institutions where we can go and, invest our money. So those are the investment banks or the brokerage funds or firms. Your insurance companies, your mortgage companies, those are hybrid institutions. Then you have commercial institutions, which are commercial banks. Those only deal with businesses and the government. You have consumer banks or consumer institutions and your hybrid banks that will deal with both people as well as businesses. And then your consumer institutions will deal solely with individuals. So what are some examples of each of these banks? Consumer banks are the ones that we see, the ones that we're all familiar with, which are mostly, your Bank of America, your Capital One, your TD, your Chase, Charles Schwab. Commercial banks are the ones that businesses and governments reach out to. So Goldman Sachs, Morgan Stanley are good examples of commercial institutions. There are banks that are only online. So I don't know if anyone has used an online bank, but Discover, SoFi, they are all examples of online banks. Credit unions are, we've heard of Alliant. And then neobanks are software which hold money. So it could be a fintech startup or startup run, which are purely digital banks. There's a question, is it good or bad to borrow from my banking institution? Well, it depends. Usually your banking institution would have a history of your purchases, your accounts, and it's very easily linked to any money that you borrow. So if you take a loan from the same financial institution, but you also have a checking or savings account at the same banking institution, it might make transfers easier. So I can say that it depends. Usually you will have both money being stored in a specific banking institution, and you'll also be able to take loans from them. So it is kind of a hybrid or universal type of institution where you could do both.
Ananya, if I might jump in right here, just as a reminder, Ananya is not a financial advisor, so do your own research. And just from my experience, to anyone that's looking to borrow money, banking institutions tend to charge a higher interest rate. I think you do need to look at the reputation of where you're borrowing from, along with the interest rate associated with how much money you're borrowing, because it will impact you in the long term. Again, Ananya is not a financial advisor. Please do your own research as you go through your finance journey.
Thanks, Rishma. Okay. Our next question with our handy poll everywhere. What considerations did you make when opening or choosing an account? So this is specific to when you were opening, let's say, a checkings account or a savings account. What are the things you looked at? Did interest rate matter to you? Yep, we see APY. Did it matter that all of your accounts were in the same place? Fees, yeah. Minimum balances are another good one. monthly fees, interest rate, branch locations. Interest rate and fees. Bank reputation. Nothing. All of this is stupid. The rich get rich and the poor suffer. But that's what we're trying to change. We're trying to give ourselves more knowledge to be able to change that. And just the simple understanding now of, okay, all of my money is going into a checkings account because I was told when I went into the bank that I need to open a checkings account. And so I open one, but I get no interest on it. And now we know that a high yield savings account exists and we can put our money in there for emergency funds and we will earn interest. We will earn some amount of money, which allows us to buy more bananas. Fees, the benefits, interest rate, didn't need to keep a large amount of money in an account. Familiarity, yes, the user interface of using a banking app. Rates and fees that I see in the chat. Let's get into some of the considerations. Don't we need checking accounts to pay bills? Good question, Kelly. Yes, most of the time you would pay most of your bills through checking account. It's a very fluid way of moving your money. Okay, what considerations do we make when opening an account? So some of these things came up. Our transaction fees, which is how much the bank is going to charge in case we, want to make a transaction from one bank account to another. Minimum balances, APY or interest rates, yearly charges, maybe ATM locations, wire fees, which is if we're moving money from one account to someone else's account, that transfer will cost a wire fee. Some banks, it can be $35. Some banks, it can be lower, higher. The other couple of things that we can look at, which I didn't see in the chat, is the size of the institution measured by assets under management or the number of customers. So sometimes it's important for us to, there could be a bank that only manages about $1 million worth of money in a regional area where we feel, okay, maybe it's not entirely safe to hold our money, or versus we might feel safer with a bigger bank that manages more assets. The other things we could look at are years of operation. How long has the bank been up and running? If there's a bank that's 1 year old, maybe we don't trust it as much. Maybe we do. Versus maybe a bank that's been running for 50, 60, 100 years. Some of these other ones were mentioned where we have physical proximity to our home or our workplace. It could be employer-based. Our employer told us we need to open an account here. And so we did, or they opened one for us. We have benefits or cash opening bonuses. How many of us have, opened an account with because our friend or someone we knew sent us a referral link and said, okay, why don't you open an account here? Customer service could be another big one. Online features, maybe they have a great banking app where you can see, most of your features and most of your account information online versus another bank which doesn't have as strong of an online, support system. Another important one is making sure that your account is FDIC insured. What does that mean? It means that up to $250,000 that you store in that account, if that bank ever goes bankrupt or has to be closed, you can get up to $250,000 back. Another big one is overdraft fees. Almost 23 million households in the US pay overdraft fees, on average, it's about $150 of overdraft fees per year. And that's a massive number. And it can really help when you're on a constrained budget to evaluate our usage and understand where we're getting charged. Yep, I think Kelly, you have your hand raised.
Yes, my question is that 250, is that per bank,
Per account.
per account, even if you have a, okay, I just wasn't clear on that. Okay,
It's $250,000.
no, I understand. I understood that.
It's per account.
Okay, great. Thanks.
Okay, what other things do we need to remember when opening an account? You can open accounts in person or online, so it's a good idea to check with your bank as to, I know that Capital One, you can open an account online. Some other banks, you still do need to go in person, so it depends on what you're most comfortable with. If you enjoy that in-person interaction and you feel it's necessary to build trust in your institution, absolutely go into your bank, walk in, and you can open an account. Nowadays, a lot of accounts you can open them online. What documents do you need to open your account? So the most common documents you need are an SSN, an ID, and usually a minimum balance of about 25 to 100. There are some bank accounts that don't require an SSN where you can walk in with an ID and that minimum balance, and you should be able to open the account and maybe a proof of address as a secondary form of ID. Now, if you're undocumented, usually you'll need an ITIN or an individual tax identification number, along with a foreign or local address, and also proof of your local address. Sometimes they'll ask you for multiple forms of ID as well. Now, other things to remember when opening an account. You should add a beneficiary. What is a beneficiary? It is someone who will be able to have access to the funds in your account in case of any emergency or in case, someone passes away. So it's always good to make sure that you have added a beneficiary to your account. It could be a spouse, it could be a partner, it could be a parent, it could be a child, it could be a friend. That's dependent on your relationships, but it's always good to have someone that you can trust that can manage your account in case of an emergency. This is also a good thing to maybe talk to our parents about. If we still have parents or family that have accounts that have stored money in them and have not elected a beneficiary, it'll reduce the legal hassle of getting into an account in case of an emergency or in case you need access to those funds. Another thing to remember is personal details. Make sure that all of your addresses and phone numbers are correct and updated. So in case you move, in case your phone number changes, please make sure to always have all of your accounts up to date. There's a question in the chat, even for checking accounts. Yes, you will usually, it's very easy to elect beneficiaries for your entire, so if you have a profile online, if you're doing it online, you can elect it's very easy online to add beneficiaries centrally. But yes, even for checking accounts, because you do store money in your checking accounts, you could have a large sum stored on your checking account. It's good to have beneficiaries elected to your checking account as well. Security. You should always safely store or encrypt all of your details. Never have your passwords written out on a piece of paper or loosely typed on a document. Always make sure that all of those important passwords, important account numbers are securely stored. And statements, you can elect for paper statements or paperless statements based on what works best for you. It would be good that in case you do move often, it could be better to have paperless statements so you don't miss any statements that are coming into a possibly an old address. And then it's always good to make sure that you know your minimum balances so you can prevent those overdraft fees that we were talking about earlier. What are overdraft fees? So for example, if you have $70 in your checking account and I go out and I buy $120 worth of groceries on my debit card, that means I'm now $50. So the real money that's stored in my account is $70. But I have gone and taken an extra $50 from my bank. And so because my bank is covering that additional $50, they charge me an overdraft fee. Those can be extremely steep. So make sure that your accounts are above minimum balance so you can prevent any of those. Can I use my kids as my beneficiary of my checking account or adult only? You can use your kids as beneficiaries. What about closing an account? So has anyone, maybe just by a quick show of hands or in the chat, have you closed an account before? And maybe if you closed your account, why did you close your account? Also, when you elect beneficiaries, you'll have to usually put in their SSN. That's just one good thing to know. So your kids, if you're electing them, your kids would need to have an SSN number. In some banks, you can elect to have transactions denied. Yes, you're right. Unreasonable fees is why you close an account. Bank was closing. Yep. So some reasons why you may want to close an account, like Kelly and Angela mentioned, yeah, they're extremely high fees. There could be low interest rates, so you decide to close your account. I closed an account because there was a low interest rate. It could be an unused account that you just haven't, touched in 10 years. You might lose trust in the institution, like you said, bank was closing. If you move to a new city or state or country, you might want to close the account. There could be customer service issues, so you decide to close the account. Maybe you're consolidating your money. Like I said, if you have 15 accounts and you want to now consolidate your money instead of having it spread across. Also, if you're switching from a child account to an adult account, or even passing away of a person, that could also be a reason to close an account. Hey, Kelly, yeah, you have a question.
I had a comment that
Yeah.
I once had a bank account. It was a business account, but they wanted you to use your credit card to avoid checking fees. So
Okay.
that for that reason, I closed the account.
Yep. That's a good reason to close an account. Can you add a nonprofit as a beneficiary instead of a person? I'm not entirely sure about that. I will check and get back to you, Shrika. Okay. Now, debunking a common myth. It's commonly heard that you should keep your longest bank account active. That is a myth. Your bank account is not a credit or debit card. It does not show your history of your ability to pay back money you have borrowed as a debt. So in the case of bank accounts, you're not trying to pay anyone back. It is just the amount of money you have stored. So credit institutions will never use your bank account to determine your credit score. So that's a long-winded way of saying that you may close your bank account without it affecting your credit score. Now, just one caveat is that if you close your bank account with negative balances, or if your account has a lot of overdrawn fees and your account is overdrawn, then it will affect your credit score because you have then taken effectively a loan from your bank to be able to pay things off. So make sure that you're in good standing with your bank, with no negative balances or overdrawn accounts before closing your account. Just other things to remember in terms of the process when closing an account. When you open an account, make sure it's a good fit instead of having, 5, 7, 10 accounts that, may or may not serve you. ensure all deposits and payments are cleared before closing an account. Make sure to reroute any automatic transactions, any recurrent payments or subscriptions that you may have to your new account. Make sure to open that new account before you go through, and then move or withdraw your balance. So you're not charged with a maintenance fee during that minimum balance requirement. And when you move all of your money, remember that usually it will take 3 to 4 days, 3 to 4 business days to transfer. So make sure you wait for it for that entire process to go through before closing your account. You can close it online. You could close an account over the phone, or you could go in person. But whichever option you choose, make sure to have written request, a written confirmation from your institution that yes, you know, this person has closed their account at this bank, and the bank has approved it, that you don't have overdraft fees or any negative balances that would possibly affect your credit score. Another thing to keep in mind is that you could have, maybe you have an old bank account that had some money in it. In case of those accounts that you may not have used, let's say you opened a regional account as a child or as a teenager when you worked. If you have such an account, or even now, if you have such an account which has these dormant or inactive funds that just hasn't been touched, that gets transferred to your state treasury. And there is a process to withdraw that money where you could get it back from the state, just in case you ever have an account that, you know, is dormant. Okay, we're going to meet Marcus again. So Marcus, like we've seen in a couple of workshops before, he's 33 years old, originally from the Caribbean. He's a single parent with twin 7-year-olds, Anton and Antonia. So Marcus tracks a few months where his spending increases, and yep, Kelly's right. Marcus is great. Marcus segments money for a couple of different things that are important to him. So he tracks these in his various accounts, and we'll see a few examples of how he tracks his money. So his twins' birthdays are in April, and he does activities with them in the summer. So for their birthdays, with gifts and, you know, cake and any places that he books, any activities, he budgets about $800 for their birthday and almost $1,000 over the summer months. So that's equivalent to about $1,800, and puts in a $500 buffer, which gets us to $2,300 for the year for their birthdays and for any summer activities that they do. Now, during the slower times of the year, Marcus tries to save money in increments, but on an average, he tries to save about $192 per month. Let's remember, Marcus is a music teacher for a high school, and he also does piano lessons on the side. And he puts his money into a high yield savings account for birthdays, and he's named this account Birthday and Summer. Marcus pays for gas and heat in his home, and over the years he's tracked his spending in his gas and utilities bills, and he sees that from November to March he spends significantly more during those winter months. So from April till October, he increases his deposits into a high yield savings utilities account. Now, Marcus will try to take at least one vacation with his kids, which will cost him about $4,500, but he budgets for $5,000. And he puts this into an 11-month certificate of deposit. And he uses the money that he received as a bonus. And his interest rate on this account is 5.25%. And he saves this again in a high yield savings vacation account. Now, whatever money is remaining after the vacation, he tries to pay off his children's loans. And if there's any money after that, he'll put it into his Vanguard investment account. What is important to note here is that Marcus has done his calculations and analyzed what cash he will need in the future months. And he's added buffers. And we might think that a lot of people can say, oh, Marcus can afford to do this because he has 2 jobs. But please remember that Marcus started by being very mindful of his money and of where he put his money and how he used his money. Okay, so let's quickly look at an example. I know we're coming up on time here. Let's look at Marcus's account structure. So we see that Marcus has 2 checking accounts, one for large withdrawals and the second for day-to-day uses like credit and debit cards. He has 2 savings accounts. He has 2 high yield savings accounts. He has one as his emergency fund, which is 6 months of his mortgage, food, utilities, car, and school costs. And then he has 1 vacation fund. He has retirement accounts. He has a 403b. He has a Roth IRA. And then he has 1 investment account and then 1 529 state-sponsored account. And so he's gone in and taken an Miko, who's sorry, Miko, I hope I didn't butcher your name. It's his phone number. So what Marcus has done is he's laid out his estimated costs, how long he wants to achieve his savings in, and how much he will need per month to save. Again, these are just rough estimates. If he saves less or he saves more, but it's a good way of figuring out how much he can try to save. I'm going to skip over the not so fun facts, or I'll very quickly go through them. A lot of LGBTQ individuals, about 62%, face financial issues. It's very hard to change documents, names on documents. You need to, go through a long process of your IDs and your social security card. The reality of it is that an online bank might be a good workaround, just in case they don't need an SSN or need many IDs. Disabilities, approximately 1 in 4 adults in the US live with a disability. And an important account to be aware of is an ABLE account. If anyone wants more information, I'll add a list of resources to go into ABLE accounts. And then legal status. If you're undocumented, you're still allowed to open a bank account, and banks are not supposed to ask you your legal status. In reality, it might be really hard. Again, an alternative might be an online bank, which does circumvent some of those traditional pathways that you need. Just a quick example, Bank of America, PNC, Citibank, they do not require an ITIN or an SSN, so it might be easier. If you could leave your email in the chat, and if Reshma could just copy that, I'll definitely send you those details. Okay, we probably don't have enough time to go into our activity for today, but this is something you can do offline. It will take you about 5 or 10 minutes. We can go back into our financial awareness blueprints. If you're new to the workshop, we will link it in the chat. But if you're not new, if you've been here for the first 2 workshops, if you could open that up. And then in the accounts tab, if you could start off by listing out all of the accounts that you have, and then go into the ins tab that we're very familiar with and list out all of the accounts that your money flows into. So if your employer deposits money into your account, then, list your employer in your ins, and if your money flows into your checking account, put your checking account details there. And then go to your outs tab and list what account normally covers those expenses. So I'll quickly go to the financial awareness blueprint, and I'll show you where you can fill these out offline, and then we can do the cash flow analysis in the next session. Sorry, Reshma, would you be able to confirm if you can see my Excel sheet?
I can.
You can?
Yep.
Okay, awesome. So this is the accounts tab that you'll find at the bottom. If you could, I've already put in some placeholders here. So if you could fill in your account, if you have an identifier for your account, such as Marcus has a high yield savings account as a vacation fund, you could have a furniture fund, you could have, you know, your down payment for your car or your house. If you have any investment accounts, and I've listed some examples here, if you have any wallets, and if you have any crypto accounts. So list all of your accounts out so you have a good idea of all of the accounts you have. And then in the ins tab, let's say, you know, the money is coming into your checking account, you put those details here in column H. And then same thing in your outs tab. So if it's going from a particular amount, if you have your mortgage and it's going out of your Capital One checking versus all of your groceries are going from your, you know, your Chase savings account, make sure to add those details in. It should be about a 5 to 10 minute exercise. I do want to just be mindful of time here, so. And thank you all for sticking on. But just actionable next steps. Let me move back to our presentation. Okay, today we learned about accounts. What are the different types of accounts we can hold? How do we open an account? What to consider when opening an account? Maybe all of you can go home and see which accounts you have and how big those banks are, how long they've been around, and what their assets under management are, which is how many billions or millions of dollars are they holding. And also we learned about the system behind creating and maintaining these accounts. Your actionable next steps are go back to your financial awareness blueprint and update the flow. Think about where you'd want to simplify it. Do I have too many checkings accounts? Do I want to simplify it to one checking account? Do I like having 2 checking accounts? Do I have multiple savings accounts? Can I combine them? Do I want to add new savings accounts based on my goals? If you don't have too many accounts, close them. If you don't have enough, open based on need. Again, this series doesn't start or end here, but it should push you in the right direction. The next session is on March 22nd at 1 p.m. and we will be covering credit cards and credit scores and the uses of credit cards, pros and cons. What credit scores are, we'll go into scams and frauds, and we'll also go into automating your accounts. Okay, workshop began. Did today's workshop begin late, or was I led into the meeting late? No, I believe we started at about 1:03 or 1:04. Oh, we started at 1:10. Okay. Okay, then we must have started a couple minutes later. Thanks, Reshma. Thanks, everyone. We can spend some more time on the accounts piece during our next workshop, and we'll go into more detail for credit cards. Please make sure to fill out the survey. The link is here and the QR code is here, and you will be entered into the raffle to win I Will Teach You to Get Rich by Ramit Sethi. I'll look up if I can add it on to it. Okay, awesome. Thank you.
Thank you, Ananya. Sorry. Hi, everyone. If you haven't left yet, please complete the survey. Our next session is on credit cards and credit scores, and you'll continue to work on the financial awareness blueprint. I'll end the recording now, so anyone who has any questions, if you want to stay back and ask Ananya your questions, feel free to do so.